Welcome back to TeshKidFX for another price prediction update, and in this video I'll be giving you a price prediction update on Quant, whose current price stands at the $106.3 mark. And here on TradingView, the market is down by 1.57%, and in this video I want to give you the short-term and the long-term scenarios that I expect to play out, basing my analysis on the Elliot structures and the Fibonacci's. And allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the Quant chart. Quant from the all-time high had been seeing lower prices in this massive ABC corrective structure, which took us back to around the $40.1 mark. And after seeing that low, we have been seeing a very nice bounce to the upside in a movement that had been obeying the Elliot structures, and that is better seen here on the 4-hour chart, where you can see have this Elliot structure in blue, having the wave 5 making its peak at around the $229 mark, and also completing the formation of a higher Elliot wave count 1 to the upside. And after seeing the formation of a higher Elliot wave count 1, whatever we expect next is a corrective structure in the formation of a higher Elliot wave count 2, and I believe that is the move that we are in here on the Quant chart. And once you see the formation of a higher Elliot wave count 2 and also make the low for that higher Elliot wave count 2, then we can expect an impulsive movement to the upside in the formation of a higher Elliot wave count 3. And here on the 4-hour chart, we have chart patterns that are in formation over here, like this one, which is a bear flag, which is a trend continuation pattern, and that means I'm expecting a breakout out of this chart pattern to the lower side. And you can see we have managed to break out of the channel of that flag to the lower side, and we also lost a key area of support at around the $110 mark. And after losing it, we even saw a retest of that key area of support, and you can see this was the breakout to the lower side, losing the key area of support at around the $110.9 mark. And after seeing the breakout to the lower side, we saw the retest, and after the retest we continued pushing even lower, and that means there are chances that we might continue pushing even lower to make a new low, and that is as a result of this trend continuation pattern, which is a bear flag, which is right here on the 4-hour chart. And that means there are chances of getting a new low here on the Quant chart in the formation of that higher Elliot wave count 2 to the lower side. And jumping to the 1-hour chart for further analysis, and I want to first focus on the chart patterns that we have information over here before I get into the ABC corrective structures that we can have here in the formation of that higher Elliot wave count 2. And here on the 1-hour chart, you can also see that we had another chart pattern which is right here, which gave us a breakout to the lower side, and that chart pattern was a channel which gave us a breakout to the lower side, made our low at around the $102 mark. And once we saw that low, we saw a very nice bounce to the upper side, which is a bit of a recovery, and managed to break above the 20-day MA, and we have lost the 20-day MA once more, meaning now it's acting as resistance here on the 1-hour chart. And getting to the other chart pattern that we have information here on the 1-hour chart, which is a head and shoulders pattern, we can have these as the left shoulder of that head and shoulders pattern. Then we have seen the head, we have also seen the formation of the neckline, and also the right shoulder, which is right here. And there are chances that this move right here might be the start of that breakout to the lower side out of this chart pattern that I have right here, which is a head and shoulders pattern. And this is a chart pattern that normally breaks to the lower side, having the minimum target area of the breakout as the height between the head and the neckline, and I can get that height and then place it right here below the neckline, and that gives me a minimum target area back to around the $91.2 mark, meaning there are chances that in case we continue pushing lower, lose the key area of support at around the $100 mark, there are chances of making a new low at around the $91.6 mark, and that is as a result of this head and shoulders pattern that I have right here. And getting back to the ABC corrective structures that we can have here on the Quant chart, there are two ways we can have that ABC corrective structure. And the very first way is assuming this is a massive wave A to the lower side, making our low at around the $94.3 mark. And after seeing that low in the formation of that wave A, whatever we expect next is a bit of a bounce to the upside in the formation of that wave B, then expect an impulsive movement to the lower side in the formation of that wave C. And in the formation of this wave B, we can sketch out a minimum target area to the upside in the formation of that wave B, using the Fibonacci's, connecting them from the high of that wave A to the low of the wave A, and that gives me a minimum target area between the Fib level 0.618 0.98 and the fib level 0.382, which perfectly lies between the $145.5 mark and the $177.4 mark. And from what we are seeing here on the charts, there are chances that these might not be the possible ABC corrective structure that Quant is going to obey, because from these structures right here, there is no chance of making a high at around the $145 and the $177 mark very soon, and that means a different ABC count. And the other way we can have that ABC corrective structure is having these as the wave A, then a wave B, then I'm expecting a new low in the formation of that wave C, which should fully maximize the formation of that higher Elliott wave count tool. And once that happens, then we can expect a very nice bounce to the upside in the formation of that wave 3. And because a wave 3 is an impulsive wave, I would also be expecting to see fractal waves in formation within that wave 3, having the wave 5 completing the formation of that higher Elliott wave count 3 to the upside. And once we make the low for this higher Elliott wave count 2, then we can sketch out a minimum target area to the upside in the formation of that wave 3. So let's be patient and see how that plays out. Also taking a look at the indicators here on the RSI, we are trading at around the 44 mark, meaning we have massive room for us to support any movements to the upside. Also taking a look at the MACD, here on the MACD we have been able to print a bearish cross, meaning no prices are coming our way. So let's be patient and see how that plays out, and I'll keep you updated.